Hi everyone, welcome back to another video in Serena Trading Moves. Thank you so much guys for the support I've been receiving lately. It's really meaningful and I really appreciate it. So if you guys want, please make sure to go to the first comment down here in the comment section and join the link there because it will take you directly to my WhatsApp. I help you guys and teach you more about how to trade and you get to join our special VIP group. So make sure to send me a message and I will be waiting for you guys. So today we're going to talk about, as you guys can see in the title, this week could decide the next big move. So let's really talk about this week because I don't think people realize how important this moment actually is. Last week was not random. It felt slower, more hesitant, like the market was waiting. And usually when the market starts waiting like that, it means something bigger is coming. So this week is not about data only, it's about direction. Before we even get into what's coming, you need to understand where we are. We just had a strong run in stocks, AI hype, tech rely, everything pushing higher. And now we're at a point where valuations are not cheap anymore, positioning is quite heavy, and expectations are high. So the market doesn't need bad news to drop, it just needs less good news than expected. Every week has data, but not every week matters. And this one matters because it comes at a sensitive moment. Because the market is basically asking, are we still in a bullish trend? Or that was the move. Was that the move? Like, if you can see, yes, we're bullish on all the indexes here, but we see that the market is going down, especially the S&P. Same thing goes to Nasdaq. So the answer depends on how we react to what's coming. So we have a lot coming this week, especially the possibly oil and geopolitical stuff in the background, crude oil inventories, central bank speakers, inflation data, and jobless claims and labor data. But again, and this is important, the numbers themselves don't matter as much as the reaction. Let's really talk about inflation because that's the main driver. Right now, inflation is the anchor for everything. If inflation stays high, central banks stay restrictive, rate cuts gets delayed, liquidity doesn't expand, and that's like great for growth stocks. But if inflation cools, suddenly the whole narrative changes. Rate cuts come back into play, risk sets get support again. So yeah, one number, massive impact. And here's where most people get it wrong. Good data doesn't always mean the market goes up. Bad data doesn't always mean it goes down because what really matters is what was already priced in. If everything expects good news and you get good news, nothing happens. Or just worse, it sells off. And this is probably the most important part right now. Positioning. Because think about it. Hedge funds already increase exposure, retail is still active, still buying dips, and big tech is crowded. So just ask yourself, who is left to buy? And that's a real question. Because markets don't go up just because things are good. They go up because there's new money coming in. And that's why I say the market is fragile right now. Not weak, just fragile. And there's a big difference. A weak market is already going down, but a fragile market can still go up. But it doesn't take much to break it, okay? So if you really want to understand what's going on this week, don't watch the headlines, watch behavior. Things like, does the market overreact to small news? Do stocks struggle to hold gains? And are dips shallow or getting deeper? These little headlines tell you way more than my headline, than any headline here, sorry. Even intraday actions matter a lot this week. You want to see strong opens that continue, strong opens that fade, weak opens that get bought, and weak opens that keeps dropping. And that's real-time sentiment. So let's map it out clearly. We have two scenarios, which is the bullish continuation. Inflation comes in softer, yields stabilize or drop, and tech leads again. Then the dips get bought aggressively, and market pushes higher. The second scenario, inflation surprises higher, yields move up, tech sells off, and no strong dip buyers. And because positioning is crowded, the move down can be as fast as possible, maybe to this level. Don't forget this one. It's very important. Fake moves because the market might spike up on news, trap buyers, and then reverse hard. Or the opposite, and this is what happens in most scenarios these days. Don't twist, don't drop first, then scare everyone, then reverse up, and that's what market did many single times last week. And this happens a lot when uncertainty is high. Another thing I'm watching is the difference between retail and smart money. Retail right now is still confident, still buying dips, and still expecting continuation. But big players, they're more selective, they're not chasing as aggressively, and when that gap exists, the market usually gets tricky. So if I'm being honest, I don't think this is a straight trend week. I don't see a clean rally. I don't see a clean crash. I see volatility, fake moves, and rotation. And this is not the week to be overconfident, not the week to go all in. This is the week to stay flexible, react instead of predict, respect volatility, because this is how people lose money, trying to force a direction in a market that hasn't decided yet. So yeah, this week is not just another week, it's a decision point. Last week showed us the market is slowing down, and now we find out, is it just a pause or the beginning of something bigger? So thank you guys for watching this video once again, and I will see you in my live stream at 9:20 a.m. New York time. So I'll be waiting for you guys, and please do make sure to join. We'll cover a lot of important topics, and have a good day.